I'm curious where your head is at right now with regard to tech and just the potential for a recession broadly.
Well, Leslie, first of all, it's really nice to see you. Thanks for having me. Every single LP is asking the question, and every single investor is, are you seeing a recession now in software? Do you see it? And the answer is, with roughly $20 billion of revenue in our portfolio, we currently don't see any slowdown, but we can tell it's coming. We can tell that purchasing managers of big companies are really getting into the deals. They're slowing things down. They're making more methodical decisions. So we clearly see a slowdown, and software will not be immune from that. It'll be more resilient, but bookings numbers will slow down.
Resilient, why?
It has a better business model. When you have almost 100% of your revenues being recurring, you're not that dependent for your business and your profitability on the next sale. You can get through that. And the second thing is, overall, the customers in business-to-business software, they make money with your products. Your product solves their inflation problem because it allows them to take out labor in the form of productivity. And the ROI from buying your products is so high that they have an economic incentive to buy the product. They may take 2 quarters off from buying, or they may take 6 quarters off, but ultimately they will come back because it is in their economic incentive to do so.
I want to ask you about the buyout environment and deal making and how this all kind of plays a role here, because over the past week we saw, over the past year, we've seen a big slump in LBOs, but financing has become a lot more difficult with the Citrix Systems deal. That's a cloud computing company. Wall Street set to lose about $500 million in underwriting the debt that will fund that takeover. Are you seeing some pain in the financing markets right now? How is that impacting the prospect for deal making in this current environment?
There is pain in the financing market. You mentioned one deal. The bigger pain is in ARR loans, when people borrow on revenue because they don't have profitability yet, and the profitability is yet to come through a buyout, which most of our industry does really well. Those numbers are down from 4 times revenue to 2.5. So there is pain in that financing. Now, it's very important, though, in tech buyouts, especially over the last 5 years, it's not about the debt, it's about the equity. Most of the deals at the current valuation environment have been done with about 1/3 leverage and 2/3 equity. So if you want to do really big deals now in software, the challenge is actually getting the equity check from your LPs and your community and other co-investors. The debt comes along in less of a form, but in a more healthy way than it did before.
So do you think, though, that given that you're seeing, as you mentioned, the signals that a slowdown is coming, is that a buying opportunity for you if you do have the equity to underwrite such deals, or does that give you pause?
It's such an interesting time right now because on the one hand, you have the public software stocks, and most of the index is unprofitable. And you and I have spoken about this before when we said growth at all cost is over, investors want profitability. If you add to this a slowdown in their bookings numbers, what is a company worth that is slowing down at the top line and is not making money? So there is more pain to come in the public markets. On the other side of that, you have what you mentioned, the buyout industry, and we're a significant player in that. Our industry earns the return. We are into buying one of the market leaders that's currently not profitable, but that has a significant market presence and a great product that we can take to 40 to 50% margin. If you do that, and this conference is called Delivering Alpha, if you can deliver that operational improvement, now it's a phenomenal time to buy. And there are so many deals in the market. There are so many public companies looking for a solution to their income statement and to their future, given how difficult it is in terms of the valuation environment.
One area where you are apparently taking a pause is that in the crypto space. You've been somewhat active in the past. I think it was last year that you announced at Delivering Alpha that you were a buyer of Bitcoin. You were a big enthusiast of crypto. And now you're taking a pause. You've been kind of turned off by what you're seeing with regard to due diligence in the crypto ecosystem, some of the crypto companies you've been looking at buying. Why is that? What have you seen in these discussions?
My personal view on crypto and on Bitcoin long-term remains the same. Who does not want a peer-to-peer decentralized system that is another store of value that can compete with stores of value from nation states and make those more efficient.
Shepard Smith here. Thanks for watching CNBC on YouTube.